This is Siddharth Alwalia. Welcome to the 100x Entrepreneur Podcast. This episode is brought to you by Prime Venture Partners, an early stage VC fund led by Amit Somani, Shripati Acharya, and Sanjay Swami. Prime is often the first institutional investor in category creating tech startups in fintech, SaaS, healthcare, and education, such as Mygate, Neo, and Reco. To know more about Prime, visit primevp.in. Today I have with me Ritu Verma, co-founder of Ankur Capital. Welcome Ritu to the podcast.
Thank you, Siddharth. Delighted to be here.
Ritu, we would love to know about your journey from a physics student to the time you spent with Unilever and Philips, and also your learnings, how your corporate experience added value when you decided to start a VC journey.
Sure. I think for me personally, being in the VC industry is like being a physicist. So it's not that different in many ways. Uh, but yes, I did start out life as a physicist. And I think that comes from what sort of binds my journey here is that I've probably always been interested in how do you get innovations out for people to use. And what probably attracted me to be a physicist was that. And then I kind of moved in that journey through different parts of how you actually, with starting out at Unilever, about how do you actually, develop innovative products and how do you bring them out to the market. So starting on developing innovative products, but moving to bringing them to market from a uh, commercials commercial perspective. And I think that's the theme that has been there continuously and continues to be in what I do as a VC today. The It's interesting that you bring up the learnings, and large organizations have multi different roles. I was always in all of the organizations I was at. I was more in the innovation department, where you were looking at bringing out new products or new services into the market. So from learnings from there, uh, it's fairly similar, because you're trying to bring out something different in the market. So you have had to navigate, um, uh, you know, product market fits, uh, learnings from the market, failures along the way because what you thought was a great idea cannot actually be produced, or the market says, "Hey, I don't like this." So it's just sort of an empathy of a startup entrepreneur, of how you go through that, is also something that you do as an entrepreneur in a large organization. The only other difference here, I would say, is that because you're embedded in a large organization, you also see the value of, or you see the journey much further out because you're working alongside other people who are obviously working on much, much more mature things. And hence, you see what 3, 4 years down the line, what a new product would have to go through and how it would actually, how would you run a business in that large, in a much larger scenario. So I think those are the two things uh, that the corporate world and my experiences in the corporate world translate into the VC world. The early days of the hustle of how you actually get a product market fit and actually listen to the market and make something happen. But along with that, what comes in that journey down the line.
And why did you, in 2013, decided to become a VC rather than an entrepreneur? The ecosystem was very early back
Yeah,
then.
it was.
There was no
Uh,
Flipkart success.
True. Um, so I think that's partially because I didn't have the burning idea, Siddharth, right? So I think in order to be an entrepreneur, you have to have that one burning idea that you're super passionate about. And through my career, seen how tough a journey it is, despite all the support systems that you get in a large corporate, right? But in the parallel, both, there were people with ideas, right? And you could make an impact. You could, there were gaps in the ecosystem, there were opportunities to be captured, and that's probably what led me to be a VC. And there is no looking back, right? So sometimes I think about, if you're an entrepreneur, you get to see that one innovation and you get to see that through, and there are huge rewards of sort of doing that. As a VC, you sit at the ringside of seeing many innovations, game changing innovations, um, and how they're growing and scaling, right? So I think I have no regrets about that. And but probably mostly when at 2013 was driven by the fact that I saw opportunities and saw innovations, but I personally did not have that one burning idea.
And how did you find your co-founder Rema
So we were both working with early stage companies, sort of more in advisory capacities here.
while you were at Philips?
No, not Palo Phillips. I was here in India. We were working with a sort of an accelerator incubator that was looking at early stage organizations, I should say, because they were kind of agnostic to there was a different range of organizations that were there. And
Yeah.
that's when we started spending time together and talking, and started working with a few companies, getting our hands dirty, sort of used our personal capital to actually become kind of angels in there. And that led to the setup of Ankur.
And what were some of the your angel investments, if you can share?
So we made an investment, which was not in our fund, and it's an investment that we've exited into a waste management company. Some of what is in our portfolio started out as angel warehoused angel deals that then moved into the fund portfolio here. So the early first two, three investments in Ankur were actually warehoused that transferred into a fund.
So, in your fund, when you started, can you share how you discovered your first few investments like Cropin and Niramai, which have been very successful
Hmm.
currently?
So I would say it was an evolving thesis, but again, I'm going to go back, and this was true probably for both Rema and I. Um, when I worked for HUL, you got to see upfront the larger market, which I would call the mass market, or what today is called the next billion, sort of looking beyond the urban centers and the, middle class and upper middle class, but looking at the half a billion plus folks that are there. And what you typically see that it is a very vibrant market. And in 2013, 2014, technology was just starting to make the forays into these markets, right? So I think that was sort of the opportunity that we were excited about. Rama, through her working in many other avatars before, had also seen this at a front end level. So seeing how you could kind of actually now take technology, get the technology to sort of integrate with what had always been opportunities, but lots of difficulties in sort of serving these markets or creating the products. And that's kind of what led us to some of the investments that we made. So if you take a look at Cropin, it falls into sort of the ag tech, what is called an agri-tech space today. That word did not exist when we invested in this company. But what you could see is that there were many reasons as to why phones, cell phones, and less so smartphones at that time, but that came along, uh, were making forays into where agriculture was done, and hence people were using them for multi purposes. Cropin was somewhere in early days riding on that whole piece, and so we did a lot of, for example, for Cropin, I mean, we went out into the field, talked to a lot of people, farmers, etc., and there was just a sentiment and foot that said, look, perhaps this is something that would get adopted. And sure enough, it did, not only in India, but way beyond India. And Niramai is a fairly similar thing, right? They're a very disruptive technology. I mean, breast cancer screening, has its traditional methods of how it is done, but obviously in context like India, it's super hard to execute, not just because of the cost of machinery, but even from a um, skill perspective, we don't have those skills. So you have to think differently in how you're going to do things in a country like India. And you have the entrepreneurs, you have this digital penetration. And Geeta was, just somebody who was kind of at the edge of doing this. And, it was a technology which technically is like you know, once you've built the software and AI out, costs very little, doesn't really need a super experienced radiologist to be looking at any of this thing, and so can be used to unlock a market which yesterday was not possible. So I think these are, it's somewhat a fun thesis. It's like entrepreneurs that you meet that are kind of solving for some of these larger markets, that led us to these investments.
And why is that, your portfolio is concentrated towards agri-tech and health?
So we are sector agnostic, Siddharth. Um, we are, but we are not market agnostic necessarily. We're looking for solutions that can actually unlock these larger markets, as I said earlier. Um, if you, and the next thing I like to say is that as a VC, you're a forward looking business here. So here's where the entrepreneurs came, and they fit into the opportunity set that we wanted to be exploring. Uh, and they just so happened that they were in agriculture and health. And that's what happened over the last 5 years. We're still bullish about that. That will go on for the next 5 years, but I think there are other things that will come in as well. And then once you build a momentum around something, there are more things that you see. So that probably leads to a larger exposure in a particular sector as you get more comfortable.
Can you dive deep into agri-tech market, the size of the market which you can believe is impacted by technology, and what role can startups like Cropin play? How big they can get? Let's say if we are talking about 2025, because that would also be the time when you would be looking to, return money to
Yeah,
LPs. So,
yeah.
so what kind of exit do you see these ag tech companies happening?
So, agri is a very, very large market, right? I mean, we all eat, and that's not going anywhere. However, it is a legacy sector which has not been touched by technology, right? So, I mean, if you take consumer or anything, I mean, this market globally adds up to be huge at the end of the day, right? So, I think the opportunity lies in the fact that it's a legacy industry that technology hasn't touched. What are the touch points where technology can actually, revolutionize this industry? And then I think there are billion-dollar companies to be built out of that, right? I mean, most ag companies are super large, right? I mean, we're talking about hundreds of billions of dollars. This is kind of what they are globally. Yeah. So I think as an opportunity set, it's very, very large. However, not all parts of it are amenable to building a billion-dollar company. Yeah, the agri also has some other challenges around it, which is about food security and protectionism and political stuff around it, and those are really actually not commercially touchable in many different ways. Yeah. Uh, but what we definitely see is that there are probably about four areas that have, uh, are really, really large chunks. One is in imports and agri inputs and how that kind of goes in. It's again a 50,000 crore or 70,000 crore kind of industry. And again, it's fraught with a lot of issues and how those supply chains actually work. And the same on the output side, right? How does that output get from farm to you and me? Is again fraught with a lot of issues of inefficiencies, lack of information asymmetries that leads to pockets of you know uh, price gouging and that sort of stuff. Uh, all of which technology is very, very capable of solving. Along with these, as you look at digitalization of these two different parts of agriculture, uh, comes information, right? So there is a large play in information and what information can kind of unlock for different types of actors, whether they're financiers, whether they are processors, whether they are governments, so that's the third area that kind of spills over out of this. And on backing on top of all of that is what I would call ag fintech. Once you have the information flows kind of available, which today is actually, it's in a digital darkness or very, very early days of digitization. So as soon as you get rid of that, on top of that, there is a very, very large opportunity for financing. And by financing, I don't just mean, loans to farmers, right? It's creating products, it's creating insurance schemes. So it's creating a whole bunch of things to build an ag finance industry, which today is super, super weak, especially in the Indian context, as to how that happens. And last but not the least, agriculture is a global play. And I always think that India, and this has been played out in other industries, is a really great sandbox where we have really good tech talent that for not much money develops world-class products, and that's applicable for a large part of the globe. So you will see the globalization of Indian tech and ag as well. So all of these are north of $1 billion opportunities, and I think they're completely investable and do offer a lot of opportunities. With You can have various combinations of these or just one segment, but there's definitely stuff there.
Till now, out of India, the only billion-dollar companies in health, or I would say the entire health ecosystem, have been the pharma companies, not even hospitals.
Yeah.
Uh, why do you believe the tech companies, especially where you are an investor, can be billion-dollar plays, considering the same time frame, 2025?
That's just the global trend here, Siddharth, right? So I think the last, whatever, if you say the decades, right, in health. I'm going to divide health up into a couple of parts here, right? One is sort of on health delivery, right? And one is on health and health linked products, right? So I think what you see happening globally is the health linked products and some aspects of delivery moving to a digital world here, right? Or embracing, software in a much, much more robust way, whether it is from drug discovery, whether it is from actually AI-led diagnostics, whether it is from personal health monitoring, optimizing hospital flows, all of that kind of stuff, right? So I think again, that's the reason that you'll see some of this happen is not because we are here all of a sudden now discovering the drugs in the world, which I think we will, but also because we're looking at the intersection of software technologies and health, which if uh, you know are developed well, uh, have global implications on how that works. Now, I have one caveat. When you come back to health services deliveries, most places have their own quirks. Like different countries have different quirks in sort of how that kind of happens. So companies that are going to go on to become billion-dollar companies will have to navigate some of those quirks. And just a pure India solution may not work as well in another country. So your technology, your product has to kind of take into account quirkiness of healthcare systems globally. And you see this in Niramai, right? Because it's not about the hardware, it's not about a physical product. It's what an Indian tech company can do with the software to unlock a completely different way of how you would go around, diagnostics. Yeah.
How has your journey been as an investor? Uh, you know, Seen distribution in both of these companies in respective spaces, uh, one in agri-tech and the other in health, because they are not necessarily a digital distribution. There is a lot of
Yeah.
physical, on
Yeah.
the ground
Yeah.
element to it.
Yeah. The phygital part of it, you mean? Yeah.
Yeah.
Uh, yeah, and that's a journey like any other this thing. So yes, this is not same as having just pure tech digitally distributed goes viral. I mean, this is not a Twitter, this is not a Facebook, this is not that kind of technologies, right? There is an intersection of these technologies with the physical world, which obviously slows things down, versus something going viral in a year or two. uh, but on the other hand, these are modes, right? So as you get those right, uh, dislodging you is super difficult. So they're much closer to less B2C-ish. There must be more B2B-ish. But once you've kind of solved for the customer and you've kind of done stuff, the customer's happy with you. Uh, you don't leave that easily either. So it's a slower journey, definitely, but it's a more lucrative journey. It's a more efficient journey in many ways, as opposed to just customer acquisition at very very high costs. Um, but they stay, right? So I mean, we've been invested in Cropin. This is now about over 5 years at this point of time, and you've seen that journey. Their first customers are still customers. As a matter of fact, not at the same size, but at much larger sizes. So that's something you get with this.
So there must be a large feet on street on both for both of these
No,
companies.
no, 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 no. So it's not feet on street, right? Because you're a B2B. The Bs have feet on streets, right? It's more about sales cycle and adoption because you're bringing in innovation into an area that didn't have innovation, right? You don't have to be building your feet on street. The feet on street your customer has. You have to be upgrading that feet on street, right? So you have to be, your technology has to be. They have whatever. Let's take Cropin for example. Agri workers need to be able to use this technology easily, right? So you'd have to have the product UI. You'd have to have training, that type of stuff. But you yourself don't have to build the feet and street, right? You're still a tech company in that. It's just you have to educate other people to use your technology.
And how does that education happen without your salespeople or your account managers going uh, on a
So
one-on-one
good question,
conversation?
Siddharth. What you see happening, the early days were, I'm going to sit and tell you and walk you through my tech, right? But more and more you see this shifting online. Yeah. So there's a lot more online based training tools, right? So, I mean, take 2013, right? Smartphone adoption was super low to start with, right? I think it was the rich elite that probably had smartphones. It was not prevalent in like every, I don't know, agent's hand here, but it is now, and people are much much more comfortable with it. So it's not like you're getting them a rocket here and saying, hey, now I have to sit with you to explain it. It's more like, okay, I'm accustomed to it, and I open this app, walks me through a training module. I can do Q&A. Maybe I have some video classes. So there are a lot of those things that the just the customer is much more amenable to today. So you see the physical level of it coming down, and I'm super optimistic that it will keep coming down. We're invested in another company called Jiny, and Jiny is a super exciting company for us because it plays as a horizontal across all sectors, and saying how do you take people who are uncomfortable at interacting with the phone in any language and put in the tools to bring down the cognitive load here. So if I'm a field force worker and I'm just having trouble and I'm not too comfortable, I mean, I can watch YouTube videos, but navigating further on the phone is not my comfort zone. This is an overlay that helps me do that, and we ultimately see that helping any company, put it this way, bring down the physicality and making things much more digital, because it's like a person sitting there talking and pointing at things and walking you through stuff.
Got it. So Ankur Capital's recent fund is of 350 crores. Tell us more about the deployment plan of the fund and what's your average ticket size going to be?
So the deployment strategy remains very similar to what we had earlier, except we have got larger check sizes and we can go deeper. So we've been gung ho on what digital and can drive in the next billion markets, the mass markets in India. And that's the same thesis that underwrites that. We're sector agnostic. We've done a lot of ag tech. We will leverage that. We've done health. We will leverage that. But we are open to looking at fintech, ed tech, vernacular technologies, a whole range of stuff addressing what I would call this large market segment. We used to do about $1 million checks. We can now go up to $5 million. We still start early and look to support a company through its pre-Series A to Series A journey here. That's the opportunity that Ankur was built on. Ankur means seed sapling, and when we started Ankur, it was the gap in the ecosystem of early stage funding when there were lots of Series A funders that Ankur came in to sort of address. We continue to play in that. Check sizes have gone up. We've learned along the way that it takes more money.
And how many companies you're going to fund out of the 350 crores fund?
About 16 to 18, somewhere around there.
You have also given a successful exit. Can you tell us more about the size of the exit and how are you planning the other exits in the portfolio in the coming next 5 years?
Yeah, the exit we gave was in an ag company, basically, that was working in supply chains. It was a global supply chain that we were working in, and it was actually in many ways sort of how we had planned the exit in that company that it played out, where it was more of a company buyback. Yeah. The other exits that we are, will come through other funders in the ecosystem or strategic players. And we're in conversations with especially some of our earlier investments to be exiting them out over the next 6 to 8 months.
Great. And can you tell us about your journey with Carmel Organics a little more and uh,
Yeah,
you know,
so Carmel is the company that we have exited, and Carmel, as I said, played in the high value medicinal herbs market, where they were globally supplying these things. So it was much more of a physical company, and from our previous fund, we would do what we call these structured, investments that were linked to cash buybacks, right? So it's like a mez structure, but at a very early stage. And so that this is what one of those things, and they use the company to actually grow their money to grow their customers and they increase their sales and gave us an exit through that.
coming you know to one of the stories where one of the potential investors wrote a check for 11,000 rupees.
Mm.
Is it true?
Yes, it is true. That was,
And
we reached out to somebody to do a fundraising, and the next thing we know, we got a check for 11,000, which we didn't know what to do with, but we
what
returned it back.
what was
But
the reply to that investor?
thank you, but we can't take it. Right? I mean, we're a SEBI registered fund that has minimum investment sizes, so it doesn't matter how desperate we were in fundraising, you can't really be taking 11,000 rupees. So yeah.
Do you think it's harder for women to build, in your case, a VC fund and require validation from the external world?
So that's a difficult question because I have a case study of one, and I think we've never sort of given it a thought that I mean, of course, we know we're women, but we haven't really sort of given that. I mean, the trouble is that each one of us walks a personal journey through this, right? Like it's a single point of your fundraising experience, and it's pretty unique in many ways. So it's attribution of what works and what doesn't work uh, is much harder. So to say whether things were harder or easier as a woman is hard for us to do, right? Because we never quite even thought about it that way. So look, we're looking at building a world-class institution here that can continue funding and creating the innovations in the you know billion-dollar companies in the from the Indian context, uh, and to somehow insert that you were a woman in this whole piece was it didn't really cross our horizons. I'm sure there were people who were uncomfortable with it, right? Probably not happy to tell us that, and I'm sure there were people that were perfectly comfortable with it. So, but a difficult question for an individual to answer, uh, because it's a unique journey.
Ankur of the is one of the very few VC funds in the world globally to be run by women. You have got so much positive communication from the ecosystem about yours and Rema's journey. How does it feel on this side, given this space is still considered, 90% male dominant in terms of, uh, the partners in any fund?
Again, I don't think we look at it that way, right? I mean, you're absolutely right. There are very few women, and especially fewer women in the sort of on the partner level piece here, right? Having said that, I think in India we're lucky. There are other women. There have been other women who have been fund managers. Obviously, ratio is still messed up, right? That there's no doubt about all of that. Um, I think you know it's globally there are a lot more issues. I feel that there are fewer, even fewer fund managers, etc., that are women out there. I think it's important to have diversity, right? Especially as a VC. I think there isn't one thought that works. Just because you're looking at a range of different investments, there are different kinds of challenges that come up as in your investee companies, right? So to me, one of the strengths that you build in an organization, and whether it's a ratio of women or men or different thinkers that you sort of do, it's important that you bring in perspectives that give you the best chance to succeed. So I think that's critical for me personally and for us at Ankur. And so being women, um, I wouldn't say that that's the only piece here, right? I think it's how do you build up a breadth and a diversity at a fund, which is critical for delivering success. Um, and you could be an all female fund or you could be an all male fund and you could still manage that, but somewhere I think having gender balances helps in bringing in perspectives which are different. Yeah.
Coming to a personal side of Ritu, what's your daily routine like? What habits do you attribute to your success?
Wow. Okay, my daily routines are usually a mess. uh, but I think the one thing that helps, or sort of I mean, when you have early stage companies, uh, things are going up and down every day, right? So it's kind of like a roller coaster that you're on. And as an entrepreneur, you're on a roller coaster of your own company. As an investor, you're on the roller coaster of all your investees, right? So I think that's sort of what a day-to-day life looks like in many different ways. Uh, the thing that to me helps is that um, all of these are learnings, and I do take time out to read and to read about different things here. So again, coming back to the fact that you need perspectives, you need to be kind of contextualizing things that are happening, thinking for yourself as to how things would pan out, what happens next. And that just personally for me comes from actually learning and reading a lot and then making connections. So and talking to people with different perspectives as well. So I think I try to do that every day. And as a next step, look to bring that in when we're looking at, uh, portfolios and looking at how portfolios is, strategies of growth and what comes next. And, where are the next, how do you think the next year will pan out? How do you think the next 5 years will pan out? I mean, so those are kind of things I think that helps, and I enjoy doing that. So that's what comes into my day for at least some portion of my day.
What do you think are your strengths and weaknesses as a investor or a board member?
I think a board member strength, and I think this applies to us and me as well, right? One of the strengths is the fact that you're not in the weeds, right? You're stepping back and you're taking a look at the situation. So you can have a much more, uh, higher level view, a more, if I may say, even handed view of the situation. Uh, Whereas if you're in the operations, uh, it takes a lot more to extract yourself out of it. Yeah, right. So I think that's one aspect of the board. The other aspect of the board is the fact is that I think as Ankur, we've done a great job of sort of building networks out here and actually being able to pull in people to sort of help specifically at sectorially and at the board level when there are specific things that are kind of needed that are much more technical in nature, perhaps, if you sort of take a look at it. Right? I think as a weakness, I would say uh, one thing that happens is that mm, we're cross sectors here, right? So perhaps in all sectors, our network strengths aren't as strong to bring that in. And I think that's an area of focus for us to sort of actually expand and say, how do I mean, I think a VC's job in many ways is how can I bring the resources that a company needs and, to support them if you are supporting them and not just purely financial, which we are at Ankur. How do I get you to resources as soon as possible? right? And that I think we can be much better at, and I could be much better at other areas as opposed to the few that we have developed.
So, out of the 13 active portfolio companies at Ankur, one company is very different from the rest, is Jiny. Uh, So, I'd like to ask you, how did you convince your internal team and LPs? Was it uncomfortable going on the Jiny route?
Not at all, Siddharth, right? So, as I said earlier, Ginny actually was our last investment. And by that time, we were sitting at enough companies. And you asked me this question about this whole training and digital that I was alluding to earlier, right?
Yeah.
And what are sort of the challenges. So we're investing in this market, right, which is not digitally native, right? People are coming online digitally here for the first time. Obviously, watching a movie, pressing a button is the simplest. It's passive, right? Basically here. So it's how do you take out the passive, and how do you move that user to be much more active? And as I said earlier, we'd also seen this in a B2B scenario where there are training tools, etc., that you need, let alone a B2C scenario. I mean, we have B2C companies, we have farm, agri e-commerce companies, etc., where people are interacting online to purchase their inputs, right? So we had firsthand seen, you know, like where the bottlenecks are here, right? And it comes down to a very simple thing is that I'm just not comfortable navigating it. Secondly, the UIs have built with a very English speaking person in mind, right? I mean, so far we're using all of that. Some obviously translate, that's no doubt about it. So Ginny was a horizontal solution to a lot of the challenges that we'd already seen. So we had really no doubt that the applicability of something like this was actually very large across this. So I don't think we actually had much challenge. It's different because it's not sectorial to some extent, and it's like, pure tech as to what it is. But it was a need in a market that we had firsthand seen and experienced. So how do you get India to be digitally active and take out the friction? And that was the thesis behind Jin.
Thank you so much, Ritu. It was wonderful to have you on the podcast.
Thank you, Siddharth. Keep up the good work.